What's up everybody? Nate here. So something really interesting is happening in our economy right now, and to be honest with you, one of the most positive things we've seen in terms of spending over the last couple of years. You see, with this big inflation threat hovering over the United States right now, a lot of experts, economists, and investors were assuming that in 2022, most Americans were going to have less money to spend. However, so far, that has not been the case. In January 2022, United States spending actually increased by around 3.8%, and that's coming off of a 2.5%. Not only that, but Bank of America has reported a 20% increase in spending on their cards alone this year, as Americans start spending again at record rates. And remember, this all comes as inflation just hit a new 40-year high of around 7.5% in January 2022. So I want to talk all about spending in the United States, what all of this spending means for our markets and economy, and what it's going to mean for the future of the United States as a whole. Does this actually mean that the United States economy is recovering despite all odds? Or is spending going to tank again? And this increase in spending in January was basically just a fluke. Before I break all of this down though, do me a quick favor and hit, smash, or destroy that thumbs up button below, and ring that notification bell too. Both of those two things are completely free, and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that, and now I want to go over what Americans were actually spending their money on in January 2022. So let's take a look at the numbers. Like I said, retail sales for January 2022 actually increased by 3.8%. That is way up from the Dow Jones estimate of around 2.1%. Online shopping saw the biggest gain during the month of January, as it increased by around 14.5%. Furniture and home furnishings increased by 7.2%, and motor vehicles and parts dealers saw a 5.7% increase. Year over year, retail sales are now up by 13% from 2021 to 2022. That's mostly led by a 33% increase in gasoline sales and a 21.9% increase in clothing sales. And finally, inventory for January 2021 actually increased by around 2.1%, which is a good sign for our economy after facing some major supply chain issues over the past few months. But not everything was super positive. Food sales are actually down by around 0.9%, and sales at sporting goods, music, and bookstores are down by 3% overall. Now, putting those numbers aside, here's what they actually mean. With spending going up in the United States, it shows that consumers are still eager to buy things even though inflation is basically eating away their paychecks. Inflation hit a 40-year high of 7% in December 2021, and it's only increased in January 2022 by around 0.5 or 0.6%. That's a pretty big jump month over month. The fear was that with all of this inflation, the United States economy was basically going to start tanking because Americans weren't going to go out and spend money anymore. Thought process behind that is, as inflation goes up, the price of goods and services starts to increase too. Basically, if something costs $1 today and inflation is 7%, that means a year from now, it's going to cost $1.07. Not a huge jump, but as that goes up over time, if it continues to increase at that rate, well, now everything in just a few short years is costing you way more money than it used to. And remember, this is all the same products. Nothing's really changing. Like a gallon of milk going up in price is still a gallon of milk at the end of the day. It just costs you now because the value and the buying power of your dollars is slowly decreasing. So with that being said, it was assumed that Americans were going to stop spending so much money in 2022. And that started scaring the stock market because they assumed earnings reports were going to be lower this year. Now that's not completely off the table because there's still a lot of year left, but with people starting to spend more at the beginning of 2022, it looks like earnings reports are going to continue to go up for companies on the New York Stock Exchange. With people spending less, that means businesses are going to make a lot less money, but if the inverse happens, people are going to spend more, and now companies are going to continue to set those record profits, which could mean the stock market continues to rise in 2022. Now, overall, there's two other industries that we need to consider here, the auto market and the home market. The auto market in particular is kind of struggling right now at the beginning parts of 2022. Auto sales actually declined in January of this year, mainly because the price of new and used vehicles is going way up. For instance, the cost of a used vehicle is up over 40% year over year, and the cost of a new vehicle is up over 12% year over year. And there's just not a lot of inventory on the market right now. And the same can be said about the housing market. There's not a lot of inventory, so there's not a lot of sales in the housing market right now. Plus, prices are super high, and a lot of buyers are now choosing to exit the market and wait until prices start to come back down and are affordable. At the beginning of February 2022, we actually saw a 10% decline in mortgage applications, which means buyers are starting to exit the market. But what it looks like Americans are spending the most money on right now is consumer goods and services. So this is anything from electronics to clothing. And that's not a big surprise because that's usually what is sold at a lot of these big box retailers. And those are the businesses in the United States that are thriving right now, your big box retailers, because they're the ones that can survive through the pandemic and a lot of these economic lockdowns and situations. But there is one other thing that we need to consider when we talk about United States spending in January 2022. Inflation. So all of those numbers that I just went over with you are all adjusted based on our current inflation rate. And inflation has been going up steadily over the past 2 years. If we talk about real spending, which is the price and sales of goods and services measured against our current inflation level, well, real spending actually went down by around 6.8%. What this actually shows for economists and experts is that as people are spending more money, they're actually buying less things. The sales of things are going up, mostly because people have to pay more for everything right now because inflation is so high. The numbers are still pretty decent because they show that Americans are willing to buy things, but it also shows that inflation is kind of an issue in our economy because if this was a year ago and Americans spent this much, well, they probably would have got double the amount of things. It's good that Americans are continuing to spend because as our stimulus has gone away, and mandatory payments for rent and mortgages have continued once again, there was a big worry that Americans were going to drain their bank accounts, but according to Bank of America, that hasn't been the case either. You see, Americans over the past 2 years have been able to spend so much money with the help of the United States Federal Reserve and our United States government. We had trillions of dollars in stimulus that basically went to Americans with no strings attached, meaning they could spend it on whatever they wanted to. Spending for just Bank of America cards went up by around 15 to 20% in January 2022. So consumers are buying a higher volume of things, but those things are not always at the same quality that they were before. And there's a lot of issues right now with supply and demand. Americans are going into a lot of these retail stores and grocery stores and buying as much as they can because they're afraid stores are going to sell out. If you can remember all the way back in the early parts of 2020, our supply chain issues were really starting because a lot of businesses were closed down for several months due to economic lockdowns. Some stores remained open, but the things that the stores actually needed to buy in order to put things on their shelves, well, they weren't being produced. That's why we saw toilet paper pandemonium back in 2020, and a lot of other products were being bought up en masse, and a similar situation is happening right now. People aren't seriously panic buying things right now, but they're still buying probably way more than they need, even though the cost of things is going up, and this could be out of fear. They don't know what's going to happen, so they'd rather not take the risk and wait to buy something if they can buy it right now. Some items can be stored, like toilet paper. Some items can be frozen, like ground beef. Americans are going to buy these things up and then store them for later, instead of just buying exactly what they need right now. That's putting strain on Americans. But there's one other spending problem that's happening in the United States right now: credit card debt. This is kind of a bad time for spending on a credit card en masse in the United States. I will say, if you know how to use your credit card efficiently, then spending on a credit card is not that big a deal. However, the majority of Americans believe that their credit card is an extension of their wallet and their bank account. This is kind of flawed thinking because everything that you spend on a credit card has to be paid back versus your bank account. Anything that you spend from your bank does not have to be paid back because it's your money. When you spend on a credit card though, you're not spending your money, you're spending the credit card company's money. In a way, you're basically borrowing it. They'll front you the money now so you can buy something that you want, and later you're gonna have to pay them back with interest. And the with interest part is the problem in 2022. For the last 3 months of 2021, consumer credit card debt went up by around $52 billion. That is the highest that we've seen in 22 years. Part of the reason for that is because stimulus has gone away. So a lot of the free money that Americans were getting, well, that is completely gone now. Anything that Americans buy, they have to buy with their own funds. And a lot of Americans choose to spend on credit cards first. And I think credit card spending is going up right now because a lot of Americans ended up paying off their cards completely over the last 2 years. The stimulus really helped out a lot of Americans in a lot of different ways. It gave Americans money so that they could buy basic goods and services, which a lot of Americans needed because many of us were out of a job or laid off or fired during the pandemic. But also the Americans that were able to work still went out and spent money. So all of this stimulus was basically just free cash to them. A good portion of those Americans paid down their credit cards pretty significantly, and some of them paid their credit cards off completely. Now those cards are completely empty in 2022, so Americans are going back and spending. They have, in their minds, thousands of dollars that they can go out and spend. So credit card debt is starting to go up. And also, inflation is a problem here too, because as people spend money on a credit card, things just cost more now, so the amount that they're putting on cards is naturally starting to go up. Now, it's not super uncommon to see credit card debt rise during the last 3 months of a year because that is when holiday spending really comes into play. Americans are spending probably too much for things that in most cases they don't really need. But the rate is the fastest we've seen in 22 years, and it's near a record high. In 2019, the United States had a record high of around $967 billion worth of credit card debt. We haven't quite hit that yet, but it's back up to $860 billion. Now, Americans are starting to rack up that debt, and that is a big problem for 2 reasons. The first is interest rates. The Federal Reserve has talked about getting super aggressive in combating inflation in 2022. One of the ways they plan to do that is by raising their benchmark interest rates up from about 0%. Most credit cards in the entire world come with variable rates. So your interest rate is going to depend on what the Federal Reserve sets its interest rates at and what the bank sets its interest rates at. So in a nutshell, depending on how our economy is doing, interest rates are either going to go up or go down. If interest rates go up, then that means the interest that you pay on your credit cards is going to go up too. Over the past 2 years, interest rates have been super low. Like I said, the Federal Reserve set them at 0% because they wanted to incentivize people to spend. Spend on anything that you can. And then the federal government gave people thousands of extra dollars to go out and spend. Thousands of free dollars coming from the Federal Reserve and the federal government, low interest rates, so now it's super easy to get an auto loan, a mortgage, or even a personal loan, and it's even easier to use your credit cards. So now you can basically spend and your monthly payment isn't going to be that much higher because interest rates are so low, but that is changing in 2022. Now, as of recording this video, the Federal Reserve has not come out and said how aggressive they're going to be on their interest rates yet. A lot of Fed presidents have talked about 3 to 7 rate hikes in 2022, and they could be at around 25 basis points. But because inflation is getting so out of control in the United States right now, the Federal Reserve may need to raise its benchmark interest rates from 0% to around 1.75% by the end of 2022. That would be the most and fastest they have ever raised interest rates in a long time. That means all of that credit card debt that Americans are hanging on to right now is going to become even more expensive. And if you couple that with number 2, inflation, well, now we've got a serious problem. If Americans continue to spend even more and inflation continues to get out of control, well, the assumption is that Americans are going to spend less. Because wages are not keeping up with inflation right now, Americans just aren't going to have the money to buy all of those same goods and services anymore. If they continue to spend, well, where are they getting that money from? They're either taking out a loan or they're using credit cards. Credit cards are getting filled up though, and interest rates are going to start going up, which means Americans are going to have less money. And if inflation continues to rise in 2022, then Americans are going to have less money because everything they're buying is costing more. That is going to hurt everybody. It's going to hurt the stock market because spending is ultimately going to go down because Americans have to make all of those necessary payments first on their mortgage or their auto loan or their credit cards, and they're going to have less money to spend on consumer goods and services. Not only that, but businesses are going to continue to raise prices, so now they're buying even less because inflation is so high. And it's going to hurt the housing and the auto markets because Americans are going to have less money to put down on a house and less money to spend on a new home in general. Their budget is going to get cut into, so Americans that were planning on buying a house over the next couple of years, those plans might get put on hold. And the same exact situation can be said for the auto market. So what does this all mean for the future of our economy and markets in 2022? Well, I ultimately believe that all of this spending is mainly due to the fact that things are starting to get better with our pandemic and people are afraid of what is going to happen with inflation in 2022. Americans are going out and spending beyond their means right now because they want to buy things at a time when it's not risky to do so. Not only that, but the people who are financially well off in our country were bottled up so long during the pandemic. Now numbers are starting to decrease in January and February 2022 that they want to go out and buy things because they're not sure when they're going to be able to do that again. That amount of spending though just can't continue if inflation continues to go up and interest rates just get higher and higher in 2022. You're going to start to see saving accounts start to get drained in the United States. And you're going to start seeing people turn to credit and personal loans, but it's going to be really hard to do that if interest rates are going up in those markets too. And basically that's what the Federal Reserve wants by pulling a lot of their economic stimulus and raising interest rates. The definition of inflation is technically just when an economy starts printing a lot more money. But you got to think what happens to that money later. The United States government doesn't just print money and then sit on it. They print dollars to give to the economy so our economy can grow. Businesses need that money so they can expand and pay more workers and open more factories. The government also needs that money to build up our United States infrastructure and fund programs. Eventually though, that money gets trickled down to the American consumer. Even if it's given to a government organization, people, real life Americans, work at that government institution and they're going to get a paycheck. They can then spend that paycheck on whatever they want. That's basically how our economy works. Money just continues to cycle around again and again and again. But because the Federal Reserve and the United States government printed so much money over the last 2 years, well, now we kind of have a spending problem in the US because just printing the money, like I said, isn't really an issue. It just sits there. But once you start spending it is where the problems come in. If people all of a sudden have a ton of money, well, they're going to go out and spend that money more often than not. And if they're buying more and more things, well, that signals to businesses that they need to produce more because they continue to run out of things on their shelves. Production costs start to rise, so that means they have to pay more workers, hire more people, open more factories, etc. So ultimately, it's going to start costing them a little bit more each time to produce more goods. If people just keep getting more and more money though, well, then that problem basically just cycles through forever. People continue to buy things, companies continue to produce more, costs go up, so on and so forth. And that cycle pretty much goes on forever. But there's two ways to lower demand. You can basically just force people to stop spending money, or you can just pay them less. People don't have any money, then they can't buy things. On the flip side, if people have money but just aren't able to buy things because it's so difficult to do so, well, then demand is ultimately going down. And that's what the Federal Reserve wants in 2022. They want to lower demand because our spending problem has gotten way out of control in the United States. They don't want as much money circulating throughout our economy. Now, in the short term, that's going to be a problem because businesses are going to get less money. The housing market could go down because people are buying less homes. The auto market could crash and so on. In the long term, though, it means the value of our dollar won't continue to deteriorate, which will ultimately lower inflation, but it could cause a recession if the Federal Reserve gets way too aggressive aggressive on inflation. So ultimately, I think Americans are going to continue to spend money in 2022. I don't think that's ever going to go away. Americans are going to continue to buy things on credit and through loans. But I think we're going to start to see less people buy things in 2022 as inflation continues to go up. I don't think the Federal Reserve is going to get nearly aggressive enough on inflation, which means people are still going to spend money, and our asset markets and housing markets and auto markets are going to continue to set new record highs in terms of prices and value. People will adjust ultimately, and spending is going to continue in the United States. However, I don't think it's going to continue at this record pace. Eventually, it's going to drop off, and less spending and less risk is going to enter our economy. But now I want to hear from you on this issue. What do you think about Americans actually spending more in January 2022? Do you think it's a sign of things to come, or do you think it's a complete fluke? Americans are definitely not going to continue this record spending this year. Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. I hope you liked this video. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner over here. And if you're looking for more video breakdowns 7 days a week, I'm putting out content every single day on this channel, and I've actually got a video ready for you right here, so be sure to check that out before you go. Thank you so much for watching, everybody. Be kind out there, and I'll see you all in the next one.